Chapter 12, discussing the budgeting idea, and these are the outcomes of this chapter. We will define a budget and show how budgets and strategic objectives and strategic plans are related to each other. And next we will explain the budgeting process. Sorry, we will not take this part, okay, based on the course calendar. We will not take the budgeting process. We will see only the interlinking of various budgets within the business. So we will take the second part here, okay? But the budgeting process we will not take it because it's not in our course calendar. Finally, we will see the benefits of budget to the business or to the managers. Okay, so three subjects exist in this chapter. And we will begin with the first one, which is the budget, definition of budget. First of all, the budget is the financial plan for short term. That means for 12 months or for 1 year or less than that. Okay, so the difference, as mentioned in the TMA, the difference between the financial plan and the budget is that the financial plan is the financial report or the financial spending during long time, for long term, whereas the budget is a financial plan for short term. It means for 1 year or less than that. Excellent one. That means here we are discussing the idea of planning the financial activities and financial spending in the company during short period, during short time, like for 1 year or less. For the budget to be completed, we need first of all to establish the mission and objectives. And this is the main task that we have to do at the beginning of deciding to do a budget. We have to decide what's the mission, what the objectives of the business, and based on the mission and objectives, we then try to undertake a position analysis or make position analysis. Where is our position from the mission that we decide in the first step here? Where is our location? Are we far away from the mission or from our objectives, or we are near our objectives? So this is the meaning of undertake position analysis. In this step, we try to analyze our position, analyze where are we from the objectives that we decide at the beginning of at the step 1. Okay, and then for example, we see that we are far from the objectives, that we need to do a lot of things to reach our objectives or to complete our mission and objectives. Then we will think after that, what are the different alternatives that help us to reach our objectives? And this is what we call it the identify and assess strategic options. That means we have different options here, and each option can help us to reach our objectives. Here we assess, we analyze different objectives and try to find the best alternatives. Next, we select the strategic options and make long-term plan. Long-term means strategic plan, our plans. For example, we do a plan for sales, we do a plan for marketing, we do a plan for production, and so on. Each part of the business has its own strategic plan. And for each plan, Then we prepare the budget for each plan. That means for the financial plan, for the sales plan, we try to prepare the budget that help us to to complete this plan, to achieve the financial objectives related to the sales. That means here we have different budgets. We have sales budget, and we have production budget, we have marketing budget, and so on. Each part of the business has its own budget. Okay, then we try to execute these plans and check the actual performance, what we are doing to achieve our objectives, what we are exactly doing in this time to reach our objectives, and also in the same time we perform control over the actual performance. That means if we have some variance between the actual plan, the actual performance and the planned performance, then we need to respond to variance and exercise control. We need to again return back the performance to the planned performance in order to achieve our objectives in the planned way. Okay, if we found some problems in the plan, like for example, if the prices of raw materials increased, then at that time, for sure, we cannot achieve the goals and the objectives. We need to revise the plan. Like for example, we again change the price of raw materials, okay, in order to cope with the change, with the environmental change that we have. Okay, these are the links between strategic plans and strategic objectives. So here, as you can see in the middle of this flow chart, we prepare the budgets based on the strategic plans. And the strategic plans here are prepared based on the strategic options and strategic objectives. Those are all linked together. Okay, what's the relationship between different types of budgets? As you know that we have different type of budgets. We have sales budget, and we have, for example, raw materials purchase budget. We have different types of budgets. We have sales budget, we have overhead budget, we have capital expenditure budget, and so on. So there are some relationships between different types of budget, and as you can see here, like for example in sales budget, we need to think of the trade receivables. How much we will give limit to our customers to pay their purchase. Like for example, we tell the customers that you have to pay for your purchases during 2 months. Those are the credit customers, the customers that buy from the company by credit. So we need to budget here. We need to plan the account receivables or trade receivables. Okay, here also as an example, we need to here the cash budget need to be also prepared, and the cash budget here is related also to the trade receivables and the trade payable or accounts payable. And you know that accounts payable or trade payable here means that for how long the suppliers give us a limit for paying for our purchase. Okay, if we buy from the suppliers on credit also. So we need to plan each part of the business here carefully in order to cope with the change during the operations and during the production. This is the last part in this chapter, which is the benefits of budgeting and budget to the managers and to the business. So these are the 5 benefits that budget provide the business with. For example, the first one, that the budget promotes forward thinking. That means it enhances the planning skills and planning experience to the managers. When the managers of the organization think of doing budget, then they think in a forward way. They think how to plan, and they will have some new skills, which is the future or the plan, the forward planning. So this is one of the benefits that the budget gives to the business. And also the budgets motivate managers to better performance. How can they motivate the managers to better performance? For example, if we tell the managers, okay, or the higher management in the company, tell the manager that if you reach a certain level of performance, then you will get some reward for your performance. In this way, the higher management will motivate the managers to enhance their performance. Okay, the budgets also provide a basis for a system of control, because as you can see here, we said that after we prepare the budget, okay, the company needs to see the actual performance and needs to control this performance. If there is any deviation, if there is any variance in the performance, then the company needs to control this process and try to return back the performance to the planned level. That means the budget provide a basis for control, enhance the control process inside the organization. And also budgets provide a system of authorization, because when we do budget, then we will give, or the higher management will give the managers, each manager will give him a certain level of authorization. For example, level 1 manager will have higher authorization, higher financial authorization, and the level 2 managers will give him, for example, middle level of authorization, and so on. So it gives us a way or a system of authorization. And also the budgets help in the coordination between different types, different parts of business, different departments. Or when we prepare budgets for each department, then there will be coordination between different departments to finish or to achieve the objectives of the business.